Welcome back. Lowe's and Home Depot have been huge beneficiaries of the home improvement boom during this pandemic, both stocks surging off of their March lows. But now Oppenheimer is downgrading both names to perform from outperform, saying they're due for a post-pandemic reset after their recent sales surge. For more, I'm joined by the analyst behind that call, Brian Nagel. He is senior retail analyst at Oppenheimer. Brian, it's great to have you. And this is the major splitting point among kind of the analyst community and all investors. Are these companies and all of retail going to benefit from some kind of permanent shift to higher demand, or is there going to be a hangover? What kind of hangover do you see coming?
Well, look, that's the key question. And, I spent a lot of time, my team and I spent a lot of time on this report. As you know, we've talked about Home Depot and Lowe's a lot on your show and on your network. And these are great businesses, okay, great businesses. And they benefited significantly through the crux of the crisis. So my concern, though, is, and use your word, Kelly, it's a hangover. It's just, where do we go from here? And I've got to think, at a minimum, we have difficult comparisons. So the middle part of 2021 will be cycling past some historically strong sales. That will be difficult. I'm also concerned that there's been some type of pull forward in demand, meaning that consumers did more than they normally would through the crisis, and that potentially pulled sales forward from future periods.
Absolutely. So I can give a couple examples from my own life. I tried this garden, Brian. This vegetable gardening is very, very difficult, okay? I'll give it maybe another go next year, but this was the year, and I realized I don't know if I have it in me. So between that, some of the projects around the house that you're not going to repeat, I absolutely hear what you're saying. And let's talk about the comps for a moment. I mean, we've seen Lowe's and Home Depot put up 20 and 30% comps. You cycle ahead to next year, they would have to be posting maybe double-digit declines, right?
I think that's exactly what happens. And, and look, it's a simple mathematical exercise. And I've followed retail stock now for a long time. And, it's interesting to me that how this dynamic can trip up these stocks. Okay, we're looking at these, like you said, 25, 35% gains, phenomenal second quarters. Cycle past those, simple math, comps will be down negative. That's usually a problem for the stocks, at least in the short term.
Right, and this is not a major downgrade here that we're talking about. On Home Depot, you're dropping your price target to 305 from 320. On Lowe's to 180 from 185. What would prove you wrong? What would have to happen for these stocks to continue benefiting for years to come and justify these valuations? And is it that this cycle of home buying does unleash a multi-year period of people spending more and more at these chains?
That's a great question. So look, I would be wrong and really on two potential fronts. One, that, and just exactly like we're talking, that the consumer has actually been fully retrained. That going forward, even after the COVID-19 crisis passes, even after we get a vaccine, that for one reason or another, the consumer continues to spend a huge amount of money on their homes. And we do cycle well past these comparisons. That's one place to be wrong. The second is that the market looks through this. Because the way, again, I spent a lot of time playing with my models, it's really assessing the near and longer term earnings power of these companies. To the extent that the market really says, okay, 21 is going to be a weak year, we don't care.
Exactly.
Now, I don't think that happened. It sounds good right now. Here we sit in September of 2020. It sounds good. What I usually see with these type of names is once we get into the thick of it, the market starts to get really worried. And what I call a negative narrative takes hold.
Fair enough. I want to just quickly ask you, because you're not downgrading all of retail, obviously. Your top picks still include Nike, Lululemon, CarMax, Carvana, Wayfair, Brian, which has also been a huge pandemic beneficiary. Why not more caution on those names?
Well, look, I'll say we look at all of our names all the time, right? So, and I have a big coverage universe, so I've got to kind of pick my battle. The one thing that stood out to me with Home Depot and Lowe's is that they were particularly big beneficiaries of COVID-19. Now, some of those other companies you mentioned are as well. When I think about a Wayfair, to me, the big positive for Wayfair coming out of this is I do think the consumer now is more trained to shop online. Okay, we as a consumer population are buying more online. I think that sticks. There's also been, in my mind, a lot more competitive fallout within that home furnishing space. So as we emerge from this pandemic, the crisis, I think Wayfair will have less competition.